Welcome to today's video on the high-income Roth IRA trap and how to use the Backdoor Roth IRA to fix it. If you contributed to a Roth IRA and later discovered your income was too high, don't panic. In this video, we'll walk through verifying your eligibility, recharacterizing the contribution, converting via the backdoor method, and properly reporting everything on Form 8606. We'll also cover the critical Pro-Rata Rule, deadlines, best practices, and common pitfalls. Let's get started. First, we will explain why many high-income earners get caught by the Roth IRA income limits. Next, we will move into the step-by-step fix, recharacterization, and the backdoor conversion. Then, we will highlight the Pro-Rata Rule and why it matters. After that, we will review key deadlines, forms, and reporting requirements. We will wrap up with best practices and common pitfalls, and along the way, we will include a couple of quick quizzes to solidify your understanding. To begin, exceeding the Roth IRA income limits is surprisingly common among high earners, especially if bonuses or investment income push modified adjusted gross income higher than expected. The good news is that this situation is fixable and can even be turned into a strategic advantage using the Backdoor Roth approach. Let's explore how. Next, verify that your income actually exceeded the Roth IRA limit. Modified adjusted gross income is not the same as gross income and can be reduced by pre-tax deductions such as 401k deferrals, HSA contributions, and pre-tax insurance premiums. Confirm your filing status and the phase-out thresholds for your specific tax year using reliable IRS sources. Gather documents, including pay stubs and benefit statements, to calculate MAGI correctly before taking further action. Now, once you confirm you are over the limit, contact your brokerage and request a recharacterization of the Roth IRA contribution to a traditional IRA for the same tax year. This includes moving any associated earnings. After the recharacterization completes and settles, convert those traditional IRA funds back into your Roth IRA using the Backdoor Roth method. Keep all documentation, including confirmation statements and any tax forms such as 1099-R and 5498. These records will support your tax reporting and audit trail. Then, to visualize the process, imagine a flowchart. You start by verifying your MAGI. If it is under the limit, you simply keep the direct Roth contribution. If it is over the limit, you recharacterize the Roth contribution to a traditional IRA. Next, you check for any pre-tax balances across all traditional, SEP, or simple IRAs as of December 31st. If such balances exist, the Pro-Rata Rule applies, making part of the conversion taxable. In that case, you may consider rolling pre-tax IRA dollars into an employer 401k plan before converting. If there are no pre-tax IRA balances, you proceed to convert the traditional IRA to a Roth IRA. Finally, you file IRS Form 8606 to report the non-deductible contribution and the conversion, and keep Forms 1099-R and 5498 for your records. Meanwhile, the Pro-Rata Rule can create an unexpected tax bill. The IRS aggregates all traditional, SEP, and simple IRA balances as of December 31st of the conversion year. The taxable portion of your conversion equals your pre-tax IRA balance divided by your total IRA balance. If you hold pre-tax IRA funds, consider rolling those into an active employer 401k plan before converting to minimize or avoid tax. If you are unsure, consult a qualified tax professional. Next, let's compare two common fixes. Recharacterization typically avoids the 6% excess contribution penalty when completed by the tax filing deadline, including extensions. It moves the original contribution and earnings to a traditional IRA, keeping funds inside the IRA wrapper and setting up a clean backdoor Roth if you do not have pre-tax IRA balances. By contrast, withdrawing the excess removes the contribution and related earnings by the correction deadline to avoid the 6% penalty. But the earnings are taxable and could be subject to the 10% early distribution penalty if you are under age 59.5. This approach may also forego the immediate backdoor opportunity unless you recontribute correctly later. After that, keep an eye on deadlines and forms. Recharacterizations generally must be completed by the tax filing deadline, including extensions, which is often October 15th. If you choose to withdraw an excess, you typically must do so by October 15th of the year following the contribution year to avoid the 6% penalty. but earnings will be taxable and may incur the early distribution penalty. Conversions can occur any time after recharacterization settles, but the Pro-Rata Rule uses year-end balances as of December 31st. Report your non-deductible basis using Form 8606 with your tax return, and retain all custodial confirmations, Forms 1099-R and 5498, to support your records. Question 1. Which IRS form do you file to report a non-deductible IRA contribution and a Roth conversion? Is it Form 8606, Form W-4, Form 5498, or Schedule SE? You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is Form 8606. This form reports your non-deductible IRA basis and the details of your conversion so that you are not taxed twice on the same dollars. Question 2. The Pro-Rata Rule aggregates which accounts when calculating the taxable portion of your conversion. Is it only the IRA you converted, all traditional, SEP, and simple IRAs, only your 401k accounts, or no accounts are aggregated? You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is all traditional, SEP, and simple IRAs. The Pro-Rata Rule aggregates your year-end balances across these accounts to determine the taxable portion of the conversion. Moving on, visualize the calendar. Throughout the year, contributions can occur, and at any time you should verify your MAGI. By the tax filing deadline, including extensions, you should complete any necessary recharacterization. After the recharacterization settles, you can convert to a Roth. On December 31st, the Pro-Rata Rule takes a snapshot of all your IRA balances. By the tax filing due date, you file Form 8606, and you retain Forms 1099-R and 5498 for your records. Now let's handle the reporting. On Form 8606, first record your non-deductible traditional IRA contribution for the year. Next, report the amount you converted to Roth and ensure your basis is correctly applied so that only any earnings are taxable. Attach Form 8606 to your tax return and keep a copy, because your basis carries forward to future years. Reconcile the amounts with your custodian forms, using Form 1099-R for distributions or conversions, and Form 5498 for contributions. If you use tax software, look for prompts to enter the recharacterization date and amounts accurately. Next, consider these best practices. If possible, eliminate pre-tax IRA balances by rolling them into an active employer 401k before converting. Convert soon after recharacterization to minimize earnings that could become taxable. Maintain your non-deductible basis records from year to year. Use separate accounts for clarity if your custodian allows it. Finally, confirm all deadlines and save every confirmation and statement for your files. In summary, verify your MAGI before taking action. If you are over the limit, recharacterize the Roth contribution to a traditional IRA, then convert via the Backdoor Roth method. Watch out for the Pro-Rata Rule, because year-end IRA balances determine the taxable portion of your conversion. Report everything on Form 8606 and retain your Forms 1099-R and 5498. Finally, plan ahead for deadlines and keep excellent documentation. Before we finish, please note this important disclaimer. This content is educational and does not constitute tax, legal, or financial advice. Tax rules change, and individual circumstances vary. Consult a qualified tax professional or financial advisor who understands your specific situation before taking any action. Finally, if this video helped you, please like, share, and subscribe for more content on smart money strategies. Tell us in the comments what part you found most useful or what topics you want covered next. Your feedback helps us create better videos for you.